We're going for 10 in a row, Josh, on the NASDAQ. Why don't you address this question? How much has the landscape really improved for stocks?
I think mainly what's improved is sentiment. I really don't think the landscape has changed much at all. Most of us understood that the last rate hike was either going to be the last or second to last. I don't think anyone outside of maybe a wild guess would have said, yeah, we're going to keep hiking into 24. So if that's what we're hanging the recent rally on, the end of rate hikes, well, that's been a known probably since, I don't know, July or August. Sentiment is different. Sentiment has greatly changed. And one of the things that we've been talking about since the beginning of September is, will there be a performance chase? Will there be a year-end rally? And typically, when you have gains like the ones we've seen, specifically in the NASDAQ this year, that's exactly how the final 2 months of the year shape up. So I'm glad it's happening. I don't think it has anything to do with fundamentals at all. But sometimes that's all that counts. People feel better. They're putting money to work. They're not obsessing over money market rates for a change. We'll see how long that lasts.
Steph, you want to take issue with that?
Yes, I think a lot of it has to do with better fundamentals. We've talked about the economy hanging in there, running at about 2.5%. And we got great job number again today. Initial claims is now running 4-week moving average at 210,000, and it has been in that range for the last 7 weeks. So the job market is holding in. That is helping the consumer. Remember, retail sales last month were actually much better than expected, that everybody has forgotten about. Manufacturing, there are pockets in the manufacturing segment, aviation, onshoring, supply chain rebuilds, those are all humming, and that's helping the economy as well. And now you have the end of destocking, and that's going to help GDP as well. So GDP is better, growth is better. We're making progress on inflation, whatever metric you want to look at, PCE, CPI, unit labor cost, productivity, all of those things are showing better inflation trends. Not to where the Fed wants it to go, but certainly making progress. And to the Fed, I think they now sound a little bit more realistic about what's going on. And so I do think, as a result, we've seen the peak in rates. Maybe they stay higher for longer. We've been talking about that for over a year. That's okay, because the economy actually can handle it, growing at 2.5%. And by the way, earnings are coming in better than expected, and revisions are higher. So to me, you add it all up, and yeah, of course, a part is sentiment, but a lot of it is fundamentals. We're doing better than what people expected.
If that's true, why are small caps doing so poorly, for one thing? And then Barkin today from the Fed. We're going to have more on the Fed in just a moment, by the way. Anecdotes suggest the economy could be weaker than the data suggests. That's Barkin from the Fed.
I think small caps, a lot of the companies have high debt loads. And as a result, with higher interest rates, that's going to be a headwind. I think that's a big problem with it. I'm not a small cap investor. I don't think that the transparency is nearly as good as mid cap and large cap companies. So, yeah, I'm watching it for sure. But I'm looking at other things like industrials doing pretty good. Energy today finally is catching a bid. Financials have at least stabilized. Are any of these as attractive as technology? No. However, we are seeing a bit of a broadening out, and so maybe just go own more technology, which is exactly what I've been doing.
I mean, because in energy, for example, it's down 5.5% in a week. I mean, catching a bid is being a little generous, because, I mean, the sector's flat.
Yeah,
well, yeah.
No.
Well, I mean, the energy sector today is up 0.11%.
I know, but it was down double digits just a couple of months ago. Right. So it has had a little bit of a rebound.
Stephanie, are you saying the economy has meaningfully improved from October to November? Because that's what Scott's asking.
No.
So I agree with you that the economy is okay.
I think the economy is much better than okay.
Do you think it changed?
We just grew 4.9%, Josh.
But do you think it changed month over month?
We're not going to grow 4.9% in the fourth quarter, but we're not going to see negative growth, which is what people were expecting, or really, really terrible growth. We're running at about 2.1% Atlanta Fed tracker. That number tends to be volatile, and it's going to move around a lot. But the underlying fundamentals of the economy are better than expected, and inflation is coming down. That combination has led the Fed to pause, and I think that they're done. And as a result, you've also seen rates pull back a little bit. I think all of those reasons are the reasons why the market's done better.
So just real quick, in 1 week, the start of November, we've seen call option contracts go from 19 million to 32.5 million. It is the biggest jump in 1 week call option activity that we really have on record all year. And so from my perspective, that's a sentiment measure, has nothing to do with fundamentals. That's just people saying, all right, 2 months left in the year, nothing blew up during earnings.
And seasonally, this is a very important time and a strong time in the market.
Fair.